What's up, everybody? Welcome to Authentic Podcast with Mitch and Lorenzo. How you guys doing?
What's up, everybody? As you can see, I'm up here. I'm as high as can be in outer space.
Hey, you're with Elon.
I'm Elon Musk, baby. I am the next Elon Musk. Elon Mitch Crowley.
Mitch. Let's go.
Well, no, today we're actually super stoked about this podcast. I mean, for me, being a finance major, we're going to talk about some financial basics and
Let's
some
go.
experience that we had. So, Lorenzo, go and kick off.
Yeah. We got a comment on our Instagram by your boy Anthony, the guy he was on. We had him on in an earlier episode, and he's like, you guys should talk about finances or investing and all that stuff. And I'm like, that's a great topic. Mitch, went to U of A, right?
Yep.
Yeah. Yeah. I currently work at a financial institution and learning a lot about the financial industry. And I think it'd be a fun topic to talk about, to go, back and forth on some really important topics that are, authentic to us and our lives. And we want to just share with everyone else. If you have any comments, questions, shoot us a DM on IG at Authentic Pod 2020. You can find us on IG, Authentic Pod 2020. Follow Big Mitch Crowley. Follow Groovy MacB. Putting out podcasts and content, and we're also on Facebook and YouTube. Come on, we're everywhere. We're like the universe. Come on.
Yeah, we are everything. You know what I'm talking about? We are universal.
We are universal. We're also, on LinkedIn. We got Mitch Crowley and Lorenzo Agual. Follow us on LinkedIn. Let's go. So I think I'm gonna have you take it away, Mitch, with your first topic you wanted to talk about. I know you had some talking points you want to throw it out there.
I'll take it. 2 years of hell of finance, but it was definitely a good major. I mean, I didn't choose it because I liked it. I kind of challenged myself really to kind of get the best out of myself.
Wow, that's awesome.
I did that. So I did, definitely learn a lot from it. But the biggest kind of takeaway I have from finance is just in general, like every day of an action that you don't collect wealth. Like, think about this. Like, when you have a savings account, I did the research. Mm-hmm. When you have a savings account, your money's only earning 0.4 interest, per year.
Right now, rates have gone down. Bro, rates are barely nothing right now.
Exactly. And the average price of, cost of goods is rising by 2%. I mean, 0.4, 2%, you do the math. Mm-hmm. I mean, not really break even, you're losing money. So, I mean, you really have to be in a rush to alter your finances and really understand that every day of not making the decision to invest is making you poorer and poorer. I mean, at the end of the day, you want to start as soon as possible. The younger, the better. And you can vouch for me on that, Lorenzo.
Yeah. I mean, in what area of your life where you're inactive do you progress forward? Nowhere. Oh, yeah, if you're going to, inactivity, I think is the worst thing you can do. Even planning, you're doing something. So I think this is perfect. We want to talk, we need to, the quicker or at least the earlier the better.
Remember, Lorenzo, we talked about this is how you what you got me inspired was how you really didn't understand or never got taught. Nobody said, hey, Lorenzo, you should be, what's a debit card? What's a credit card? What's a savings?
What's a credit score?
What's interest? Yeah. You had to teach yourself. My dad being a finance, advisor, I luckily was around that realm of business and I kind of understood, but the way you taught yourself that's what is the personal development side. You took action and did something about it. So
right. I feel like you have to, because I mean, not all the time. No one's going to throw stuff at you. You'd be lucky to find a mentor or to find someone that can pour into you. So I think finding, you can even, find everything is available for you online. You can learn about anything thanks to Google. You can literally search anything you want and do your own research. The main thing, Mitch, is, are you willing to put in the work and to learn? And that's one of the main things.
And I think one more thing is once you become on your own, secure, your own independent adult, and you're paying your own rent, you're paying your expenses, and you realize whoa, money and finance is huge, right? That scary realization, I need to make money, I need to learn how to invest, I need to learn how to save.
Right.
So that's one thing.
Learning how to save is key. Like, especially, yeah, exactly. You're out of school, right out of college, and now you got to pay rent. Over here in the Bay Area, you're paying for a room. You're renting a room for $1,000 minimum. Like,
and you're living paycheck to paycheck, which is not what you want to do.
What are you going to do with the rest of your money? You know, how are you going to save up? Are you going to go into credit card debt, or are you going to, get into loans, and then your whole paycheck, like you said, you're living paycheck to paycheck. You're not building wealth, and you're not saving for the future. And unfortunately, that's where a lot of the lower income houses, families, that's what's happening. It's you're not thinking about your future. You're living paycheck to paycheck.
Living off credit cards.
You're in debt, and it's kind of people think, maybe I can just go bankrupt or something. But then it's hard to come back from something like that. And
credits, you get loans, mortgages, it's everything. So
the main thing is, learn, reach out to someone and try to get yourself out of that. You don't want to be in that hole.
Mm-hmm. Well, it's like if you mess up in your professional life, yes. But if you mess up in your finances, you've ruined your credit, you're screwed, dude. Like, I'm sorry, there's like some credit programs, but like that's hey, I lost like $8,000. Why? Mm-hmm. Oh, I invested in something stupid. Do your research. Reach out. That gets to our next topic. I mean, I was going to talk about this, but lead into it. Like for me, in my networking group, one of my good friends is my financial advisor, Andrew Herco. Mm-hmm. I've reached out to him, and I believe I pay him a flat rate fee for my investments. But I mean, think about this. I mean, you have a savings account, and I already knew this, but before I reached out to him, I was putting about 20% away per paycheck, per pay period, mm-hmm. and towards my investment account and the rest of my savings. Mm-hmm. I mean, 4 years later, I had almost $30,000 probably 2 years in there.
Let's go.
Made sales and all that stuff, but about 20% away, and it does make a difference. And I know you were talking about that too, right?
Yeah. That the other thing, I think, even let's say you don't know how to save, right? I think the minimum you need to do is at least 10% a paycheck. If you're making $2,000 every 2 weeks.
Yeah, make it kind of make it tailor it towards what you kind of make.
Exactly. Make it accessible for you. Yeah.
You still have like expenses and like other like entertainment and stuff.
Yeah. Like what can you cut out? You don't need Netflix, Hulu. What's the other thing? HBO. You don't need every single subscription service. What are the if you really want to build wealth, you're gonna want to look at your expenses. What can I cut that I can start towards saving?
Perfect thing, dude. You said a perfect thing. I just read a book called The Roadside Scholar, and he said that exactly. He basically said, listen, like list like your necessities and what expenses can you replace them with that are cheaper, right? And little things add up. I mean, this guy was crazy, like toothpaste, like clothing, like soap.
Oh, everything adds up.
And it came down a couple $1,000s.
Yeah.
Wow, if you really break it down, like the compounding interest of that, like crazy.
Right. And I was joking about this with my colleague, like, if you don't budget and you're just swiping your debit card, your bank is really good at just everything adds up. Just subtract, and they will $5. Yeah, they won't mess around.
I swear, buddy, it is.
Yeah, exactly. It's their money; they're gonna get paid. So, and then the other thing is too, if you're not budgeting correctly, if you're a lot of people do NSF, non-sufficient funds, and then the banks charge fees on top of that. So you're paying not only. Now your bank account's not only going negative, but now you're going less than negative because you're going to have to pay them. So
on top of that, they pay a percentage of you getting an NSF, right?
Yeah, so you get like a fee. Like I think Wells Fargo charges like $35 each time you overdraw.
That's the story of my life in college. I was broke in college. I got so many NSFs from Bank of America.
Yeah, and it's like not many people know this, but you have a credit score, but then you also have a banking history score. Yeah, so it's a banking history score. It's called Qualifile. Basically, if you overdraw your account so many times, it lowers your score. So then next time you want to say, hey, I want to go from Wells Fargo to Chase pulls your record and like, this guy's so many NSFs. Let's not have them open a bank account with us. And then you can't open a bank account. It's like, then you got to go to check cashing places to cash your check, which charges at least 5%, I think, at least of your paycheck just to cash the fees. So it's like fees. All that adds up as well.
Well, one thing I learned was I got only a $500 max credit card when I was first in college, so I can always pay it off, right?
Right.
A $500 limit, I can always pay it off. And then once I got out of college, my credit was really good. And then I applied for another like $3,000 credit, right? Start small, right?
Start small.
Don't, because these kids that come in, and I luckily just learned from other people not doing it. But I mean, like I was like, okay, 500 is doable, right? I know I make enough just from my job at college. I can always pay it off. Right. So start small, you work bigger, and you also build your credit up a lot more too.
Right. Which brings me to my next point is like budget. Like a lot of people, if you're young, you don't know how to budget. Like I honestly didn't know how to budget until like I was like 23, 24 years old. And it's like insane. And I'm not even that old. I'm going to be 26 this month. It's like, figure out, learn how to budget. It's not that hard. There's a thing called a $0 budget. Basically, you want to give every single dollar a place to go. You know, I have $200 for food. I have maybe $100 for my phone, Wi-Fi. You know, just the basic necessities, and then whatever you have left over, don't just leave it as miscellaneous, because the next paycheck, a week goes by and you're like, where'd all my money go?
Piggyback on that, what you exactly said is, I was going to say as well, I call it like pools of money, right? So it's like, okay, if my car breaks down, I have a couple grand in here for medical expenses, right?
Yes, pools. Yeah, different pools.
Days, because they're going to happen, right? I know you have an investment in savings, but okay, you know, I have car payments, you know, my house I want to buy. Any goal that you want, make a little pool or a little savings account for it.
Yeah.
And exactly what you said as well.
It's the same thing. It's like, different pools of money. Because if you don't tell your money where to go, your money's going to be gone by the time you know it.
You don't have an exact plan, write it out. Like you probably write it out. Okay, this is going to that. It really helps you logically think about it.
And there's so many apps nowadays, and financial technology is getting so much more.
Like stuff, right? That rounds up.
Yeah. So
commercials of that drives me crazy.
All right. So what do you got next?
So one thing I just did, which I learned from the Roadside Scholar, was basically the first investment was basically I did about 6 months ago. I invested into like a Roth IRA. So it's
what is a Roth IRA?
Roth IRA is basically an individual retirement account. So it's basically when it gets gains on it, you don't get taxed on the gains, and you can withdraw from it tax free. So it's a super big tax advantage. And at 65 and a half, you can pull that out. But basically, you get taxed in when you first start, but when you pull it out, you don't get taxed. So you get taxed on the money going in, but when you pull money out, you don't get taxed.
But you get taxed when you contribute.
Yes.
Your money grows tax free.
And there's another Roth another Roth is opposite. Money goes in pre-tax.
Right.
And then you pull it out, you get taxed.
Right.
Two different Roths, but I went with that one because it's probably the best. But basically, the max like annual limit you can put, so you can backdate it. You can do 2019 and 2020. So I did a 2019 and 2020 and max it out. The max is $6,000 for each. I maxed out both of those, and I mean it's just like I did that at 24 years old. I mean you do the math at 65. Both of those would be worth almost a couple million around that.
But now the other thing is the good tip that you said is get started early. Because I don't know if you know, but I believe there is a how much if you make too much money, you cannot be qualified for a Roth IRA.
Yep.
So it's good to start now to start building that. So then when you're in the career later down the road, say 40 years old, and you're making a lot of money, you might not be qualified to contribute for that Roth IRA.
Well, I think it is serious. I think if you what you said, I think you have like a 401k and a Roth. There's a certain amount of money you can make that you have to allocate it to, something like that. Yeah, you're right. I don't know, but do you have any? What does your company do for matching your 401k?
Well, I love I think it's good to diversify. I love that you said. So when did you start that Roth IRA?
Almost 6 months ago.
And how did you find out about it?
I already know about it through finance and through my book I read. I educated myself.
Yeah, you educate yourself. So like, I'm sure, like, I wonder if even half of our audience listening knows what a Roth IRA means.
Well, I mean, finance helped me a lot, but I did my research, looked it up, went to the advisor because I knew what I was talking about, told him I wanted, and said, yeah, it's a good idea.
Yeah, definitely. Yeah. Because so there's a lot of tax benefits for that. The other one is a traditional Roth. So there's traditional Roth, and then there's the Roth IRA. So they're both individual retirement accounts, and you can you can do that, and you can have a 401k.
Yep.
And then even if later down the road you can have, say you have your Roth IRA and it's not really making any movement, you can. I think you can only do it one time. I'm trying to figure out. So you can move that Roth IRA or traditional Roth, and you can bring it over into your 401k. Or I think I have it backwards. Don't quote me on this. I think maybe it's 401k. You can convert it to a Roth IRA.
But another one I also did was a whole life policy. So I did like a retirement life insurance. Basically, I pulled out myself. I pay like $200 a month.
Nice.
For insurance. So it's basically like I can use it as a personal bank account. Once it gets to a certain amount of money, I can pull out and then pay it back.
Nice. Once you retire?
Yeah, it's retirement. This is like a whole life policy, like a life insurance policy.
Okay, whole life?
Yeah, whole life.
Because I know there's whole life and then there's term life.
Right? Yeah, I did whole.
Okay.
So it's definitely a good thing to do. But I mean, what does your company match on your 401k?
So my company matches 5%. So when I was first starting, I didn't want to put too much into my 401k because I wanted to pay off my debts and build up my savings. So what I would advise people on that is take advantage of if your company has a 401k matching plan, because that's free money. It's free money. Your money goes in tax free, from pre-tax from your check. And it goes into the 401k, and then they pay whatever you put in. So I know colleagues that are putting their max increase, 14%. Oh no. You can go, I think like 15% of your paycheck can go towards, retirement income. But I know a lot of my older colleagues are doing it. They're putting the max contribution because they started funding their retirement like later in life. So we're young, so it's perfect to get started now and build that up. So
the kids are thinking like the way you said it perfectly. It's like as a kid, you're like, okay, yeah, up front it hurts you on the cash flow basis of maxing out. But I mean, long term, you won't regret it that you maxed out. And obviously, the more money you make, the better job you get. The more income you get.
And if you want to live in California when you retire, I think you need to at least have $1 million.
If you have to, $100,000 is nothing these years.
Dude, yeah, or you can, take that money and run to Texas or Arizona. Is Arizona cheap? Is it cheap to live in Arizona?
Yeah. Actually, yes. Another thing I'm doing is I'm going to buy a house probably next year, July of 2021. Carolina or Texas.
Nice.
As an investment property. One thing I wanted to say is the financial statement, right? Income, expenses, assets, cash flow. Mm-hmm. So I found out this on a podcast I listened to. So I didn't know that a liability is my car insurance or my car payment, right? It's taking money out of me.
Right.
But I found out that an asset is this house I'm buying and renting it. So my asset, it's a good debt. So
your car is depreciating in value.
Yeah,
wow, real estate.
So it's a debt, but my house, my investment it's an asset because it's bringing money in, right? It's cash.
It's cash flow because exactly. My
mortgage and my rent are breaking even.
Mm-hmm. So exactly, and you can rent it out, and you don't even have to live there. You can have hire a managing property manager and you just got monthly cash flow coming in.
The younger you do it, the better off, right? I mean,
exactly.
So
and then you can have multiple real estate, places. I know people that are. We have clients at our bank that do that, and they're just their own apartment complexes.
They can retire.
People coming in, exactly. Yeah. I think that's what I'm gonna do when I, later down the road, just buy a bunch of apartment complexes, and just have people just paying me. That's cash.
LaCrow Property Services. The Kroll.
LaCroix. All right, sweet. The next thing I wanted to talk about, investing. So people wanted to find out, what can you do with investing if you want to. I see a lot of young people are starting to invest. Before, I just want to preface this. Also, wait, first of all, if you don't know about investing, please talk to a financial advisor. Do your research.
You do anything in the stock market? I don't.
Yeah. Huh?
You do anything in the stock market?
I used to, but I got out in January. But everything is everything is back to normal. It was record high stock in December, and everything started crashing in January, and then everything started crashing in March. Literally, right now we're back to normal. Yeah. The stock market is back to normal, but we're still in this pandemic crisis. People are gonna get evicted. No one. We just lost it. So it's crazy how literally.
Right.
Sorry?
The stock market's been inflated because everyone's just dumping in money.
So it's so crazy. And who's getting rich right now is
Richard.
The rich. Yeah.
I made a lot of money. I mean, like I said, my Roth 401k thing made so much money.
Yeah.
I was made capital gains.
It's crazy. The stock market is the NASDAQ, I think the technology sector, it hit its all-time record high. Insane. It's just it's just. So what I wanted to say is, if you want to get into that, I see a lot of young people investing now because there's a lot of fintech, financial technology, robo-advisors. One of the groundbreaking ones is Robinhood, who is actually based out of Mountain View or Menlo Park. I think Menlo Park. So they do commission-free trading where you can start with $1 and you can buy Amazon because they do fractional share trading. And it's all free, and you just pay. You pay if you make, let's say you sell stock and you made profit, you pay taxes on that. And anyways, they started that, and then after Ameritrade, Charles Schwab, everyone started doing commission-free trading. So you can go to open up a Charles Schwab account and invest with $5 and have shares in these technology companies like Apple, Facebook, and stuff like that.
I feel like you have to be very kind of more you have to kind of be confident in yourself and have the skills and knowledge to kind of go about it. Because
even then you have to be. The main thing I wanted to say is you have to be okay with losing that money.
Yeah, that's true too. It's a high risk.
It's high risk unless
you advisor at all times, right? Even if your friend or family, ask them, right?
Sorry.
I'm saying, at least you can go talk to a financial advisor. Just talk to them,
Exactly.
They'll lead you the wrong way. No, come with me.
Even some banks will, if you can talk to a financial advisor for free, and you can talk to them.
But will they be biased? I don't know. Will they be? Are you biased? Are you biased?
No. I mean, at a credit union, we're not biased, man. If you can get a better deal somewhere else, go ahead. But yeah, so I was saying, if you're scared on trading, one of the things I heard good advice was get into ETFs or exchange traded funds, because those are a little bit less riskier. So the exchange traded fund is, you can basically, there's different ones, and you can invest in one ETF, but that one ETF is grouped with, it can be the top 500 performing technology companies, and you can purchase that exchange traded fund, and depending on how well they do, it can increase, your profits. But then if they don't do well, you can lose money. So investing is definitely.
I think at the end of the day, like you said, the resources are on the internet for you to look at.
Resources on the internet. Please talk to a financial advisor.
Hey, I'm telling you, say, hey, Mitch Lorenzo, I lost all my money.
Lorenzo told me to do that.
Hey, next podcast, bring it on our attorney.
I heard on the Authentic podcast, they told us to dump all our money in the stock market because it's record right now.
Everyone just loses their money.
I know, seriously.
It's just simple stuff that we know that can it's like slight edge decisions that can change your finances.
Side edge, exactly.
You have to go ahead and do it, right? You're the person looking back in the mirror. The only one that can be able to do it. So,
right.
Right.
I think that does it for today's episode, man. That was a good one.
Yes, I feel financially stable.
Yes. Again, please reach out to us in the DMs. Ask us questions. Let us know what other topics you guys want to hear that we can talk about.
Mm-hmm.
This was a good one. Follow us on IG on Authentic Pod 2020. Authentic Pod 2020. You can also follow Mitch at Big Mitch Crowley. Follow me at Groovy MacB. We're on Facebook as well. Authentic Pod. Any other last comments you want to speak to?
Yeah, Rocket Man. Cause I'm feeling no good. I'm just doing, everyone have a great weekend. Be safe.
Exactly. Have a great weekend.
Stay away from me. Don't cough from me, and wash your hands.
Wear a mask.
Wear a mask. Mask off.
Mask.
All right. Until the next one. Yeah, let me, Lorenzo, know what you want us to do. We're looking forward to it.
Yes, sir. All right. Peace.